Hello friends, welcome to the Economics of Finance Excellency batch. Let's continue with our topic. What is that topic, sir? The methods of measuring the national income, which we started it in the last lecture, right? So if you are new to the channel, please subscribe to the channel and please do share with all your friends, because this is the only channel where you're getting the full courses absolutely free of cost. And overall, if we talk about the whole courses at very minimalistic cost, because you have to invest only in the books, right? And a costing free live batch in Hindi is already going on the YouTube, and lots of students are already getting benefited from it. Now it's your turn to avail this benefit. Okay, so let's start with our topic now. So in the last lecture, we started with this methods of measuring the national income, and for that, we studied about this concept, that is the circular flow of income, right? That as a producer, you will be manufacturing the goods and services, and with the help of factors of production. Now, if you are taking the services of the factors of production, the help of factors of production, then you will pay to them, obviously, right? That will become the factor income for those factors of production. Once the factor income is received by the factors of production, they will spend that factor income to buy the goods, right? And again, once the goods are consumed, the circle will continue, right? More goods will be manufactured. Then again, the payments will be done to the factors of production, and then again they will spend on the buying of goods and services, that is consumption. Clear? So in that, the first method, we say that every phase has a different method. So the first method that we discussed was the value added method or the product method. That is from the viewpoint of a manufacturer who is adding the value to the product, right? Who is manufacturing a product and giving the value addition in the economy in the form of goods or services, right? And how this is the national income is calculated. That is, the gross value added is equal to value of output minus the intermediate consumption. Why intermediate consumption is subtracted, we have already discussed, right? Then from there, the net value is calculated, divided into sectors, subsectors. That is absolutely simple, right? Not to go into the very detail of why this is being divided into subsectors. For the easy calculation, that is all, right? Okay, so in this lecture, what we are going to do is we are going to do the next methods. The first one is the income method. Basically, the second one for this lecture, this is the first method. Otherwise, the second method here for the calculation of the national income is income method, right? Now, in the whole process of circular flow of income, this national income, where is the income being generated? When we talk about this income method, that means we are talking about the income of factors of production, right? Income of factors of production. This is what we are talking about. Income of factors of production, because the income is there only, right? The factors of production are receiving the income, also known as the factor payment method. Now, it is a payment from the angle of the manufacturer of goods and services who is paying to the factors of production, right? Or the distributed share method. Distributed share method means we are going to distribute the income to the factors of production. That is why it is also known as distributed share method. Clear? Okay, now the income method measures the national income from the perspective of the factor income, right? Who is receiving this factor income? The factors of production, right? Land, labor, capital, entrepreneurship. Therefore, the national income is the sum total of the factor income paid by all the production units. Who is paying that income? The production units are paying that. And who is receiving that? The factors of the production. Within the domestic territory, the payment should be done within the domestic territory of a country, whether paid to residents or non-residents. Clear? So this factor income, which is being paid by the production units within the domestic territory of a country, right? Within the domestic territory of a country, that means this is a domestic concept, not a national concept, right? Domestic concept. Whether paid to residents or non-residents, right? Now, this is the factor payment. This is the factor cost. Now, when you are paying the factor cost to in the domestic territory, what is that? It will be DP at FC. It can be gross or it can be net. If you are considering the depreciation, then it will be gross, otherwise it will be net. That means here I can say the meaning of this line. Here either it is GDP at FC or it is NDP at FC. If you are not taking the depreciation, then it is NDP at FC. If you want to add depreciation, then it will be GDP at FC, because we are talking about the factor cost. Secondly, we are talking about any payment which is being done within the domestic territory of a country, right? Whether to the residents or whether to the foreign nationals. Clear? Right, sir. The various components, then he says the various components of the factor income are compensation of the employees, right? Rent and royalty, interest, profit. So these are all the factor income, right? Rent, interest, profit. Rent, interest, profit is what? If you combine all these three, this is your operating surplus also. We call it as operating surplus also. Right? We call it as operating surplus also. That is rent plus interest plus profit. Then is the mixed income. We'll come to this mixed income. What is this mixed income? We'll come to that, right? Then he says the compensation of employees consists of wages and salaries in cash or in kind and the employer's contribution to the social security schemes. He says whatever this compensation to the employees is, what does it include? The compensation of employee means whatever the wages and salaries you are paying to that employee, whether it is in cash or in kind, right? Plus the employer's contribution to the social security schemes. That means we have studied that in the chapter of costing also, the labor costing, employer's contribution to ESI, employer's contribution to provident fund, all these will form the part of compensation of employees, right? It is a cost, it is a factor payment, it is you are paying to the labor, right? And labor cost is what? It is a part of your factor payment, right? And whatever the employer is contributing, that is a part of an employee cost, or what we call it as labor cost, right? So that is a factor payment. So it will be included in this. Then comes the mixed income. Now, what is this mixed income? Try to understand it very carefully. Let's say you are a chartered accountant. No, sir, not let's say, you are a chartered accountant, right? You are a chartered accountant. We don't need to suppose anything, sir. We are chartered accountants, or not? Yes, sir, we are, right? We consider ourselves chartered accountant. We have already started creating the emails with ca so and so at gmail.com, isn't it? Because the moment we enter this course, we consider ourselves to be the chartered accountants. That is the dedication with which we prepare our exams, isn't it? That should be the dedication. If that is not the dedication, from now on, that should be the dedication that yes, sir, we are the chartered accountants. Yes. Right? Okay, now coming to the concept of mixed income. What is that mixed income? Sir, as a CA, you are providing the services, right? And are you paying anything? Are you paying anything to an outsider? Are you paying anything to an outsider for the manufacturing of goods or those services? Are you doing that? Or no? No, sir? Right? So what is that? You are receiving the income. Here, you are receiving the profit also. Plus, because you are providing the services, you are generating your factor income also. Right? This is a sort of factor income because you are working on that. You are providing your services, right? And whatever the money that you are receiving, you are the factor here. You are the factor here. The profit also belongs to you. The operating surplus also belongs to you. So there are multiple components of the factor income being involved in just one income, and you cannot separate that, right? You cannot separate that, sir. That is not possible. So that is why a new category was created here, that is called as mixed income, right? Where you cannot separate that what is the profit, what is being earned from the services, what is the factor payment that you have made. No, because you are paying to yourself, right? There is no third person to whom you are paying or you can identify it clearly. No, sir, right? So mixed income is the income generated by own account workers. Own account worker means the self-employed workers like the chartered accountants, right? Like the farmers, like the barbers, etc. They are not paying to someone, right? They are providing the services, they are providing the goods, they are generating the income for themselves, they are paying themselves only, right? And the unincorporated enterprises like the retail traders, small shopkeepers, etc. It is the term used for any income that has elements of more than one type of factor income, right? Here you have the operating surplus also. Here you have the compensation of employee, where who is the employee? You are the employee, right? You are paying the wages and salaries to yourself, right? Operating surplus, yourself. So more than two elements, more than one element is involved, and these elements cannot be separated from each other. Can you separate it? No, sir, right? Obviously, because whatever you are receiving, that is your profit, that is your factor payment, that is your compensation that you are giving to yourself. Not possible. Clear? Not possible to separate between the things. That is why this new term mixed income was set up for the own account to workers. So after that, he says, what are the steps involved in it? What are the steps involved in it? All the producing enterprises employing the various factors of production are identified and classified into primary, secondary, and tertiary. Already discussed, right? The same ways. Then he says, estimate the factor income paid by the various production units to the factors of production. Now, what are the various factors income being paid? Compensation of employees plus operating surplus, that is rent, interest, and profit, plus the mixed income of self-employed. Now, what is this? This is your factor cost. Is there any indirect taxes involved in this? No, sir. Is indirect taxes a part of your factor cost? No, sir. So what we are considering here, only the factor income, right? So one thing is clear, it is a factor cost. Secondly, in the very starting, he told that the payment being made within the domestic territory, that is why it is a domestic concept. Because we have not added depreciation here, right? So that is why we have taken the net concept, that is NDP at FC. Clear? Any doubts on this thing? Right? If you take the depreciation here, this will become GDP at FC. Clear? If you are going to consider depreciation here, if you are going to add depreciation here, then it will be a gross concept. Now you have got NDP at FC. How do you calculate the national income? For national income, what you need is calculation of national income. What is national income? That is NNP at FC. That means you only have to go from domestic to national. So from domestic to national, how do you go? You add NFIA, that is net factor income from abroad. This is your net factor income. Net factor income from abroad. So we're doing the practical problems on this, right? So be very careful with this thing. Every small thing is a matter. That why it is NDP at FC, why it is not GDP at FC, why it is not NDP at MP, right? So all these things really need very important concentration. And the small things like the employee compensation, that includes the employer's contribution. What is mixed income? What all is included in the mixed income? What are the various components of the factor income? All these things you need to remember, right? Because all these things practically we are going to use. Very important, right? So this was about the income method. Now what is all is included in the income method? That is the imputed value of the owner occupied houses, right? Imputed means the notional value. Imputed means the notional value of the owner occupied houses, that if you are self occupying the house, then even then that there is a value which can be attributed to that house. Had that house been on the rent, that what is the rent that we should have been paying, right? Then the brokerage and the commission received on the sale of the various goods, including the second hand goods, right? Now this, when the person who is selling the goods, he receives the brokerage or the commission, that is what the income of that. Now he says here, even if he is selling the second hand goods, he is getting the brokerage for the first time, right? When you are selling the second hand goods, that is to be excluded. Income from the sale of second hand goods, that is not to be included in the income, right? Because that was included in the income when it was a first hand good and it was sold at the very first point. That was that at that point it was already included in the national income. Now if you include this sale again, that means you are doing the double addition in national income. Then why, sir, why brokerage and commission? Because brokerage and commission is being taken for the very first time. right? For example, I buy a car. From where will you buy the car? You are buying a car from a showroom, right? So as soon as you buy a car, this is added in the income of showroom, right? And in the income of that national income. Try to understand it, right? I'm just taking an example. Now let's say you are going to sell the second hand car. For that you have a broker in between, that is a commission agent, broker A. This he is your friend. You ask him that please, after 3-4 years you are now bored with the car. You say to our you ask your friend, this broker A, that please help me in selling this car. He says, okay, I'll help you in selling the car, but I will charge 10% on the selling price. Now, is he getting 10% at the first instance? No, sir. Right? So that is why the brokerage, or the commission has been, brokerage or commission is included, whereas the income from the sale of the second hand goods is excluded. Transfer payments are anyhow not included in the national income. Indirect taxes, not a part of the factor cost, therefore not to be included. Right? Indirect taxes, I have already told you that indirect taxes is not a part of your factor cost. Then if it is not a part of your factor cost, why will you include it? You will not include it. Clear? So this is all about the income method, that is income method from the viewpoint of whom? From the viewpoint of the income of the factors of production. Now the last method is expenditure method. Now it says whatever the income is being generated, now that income will be spent on the consumption, right? That is why it is known as expenditure method. Okay, let's start with, it is also known as the income disposal method. That means you are spending your income. Disposal is what? You are what? You are spending your income. Income spending method, I can say. Not the proper name. The proper name is income disposal method only. But for your understanding, I'm telling you, we can call it as income spending method. Disposal means the spending, that is we are spending whatever the income that we are generating at the stage 2, at the phase 2. Now it's time to spend that income. Why are you earning income, sir? You are earning so that you are able to spend that income. You are able to buy whatever the goods and services you want, right? So he says the factor income earned by the factors of production is spent in the form of expenditure on the purchase of goods and services produced by the firms. Now the factor, whatever the factors of production is earned, right, by helping in the manufacturing process, whatever the factors of production have earned, they are definitely going to spend that money now. On what? On the purchase, on the consumption of the goods and services. Now, who is providing those goods and services? The firms are providing, sir, right? So, national income by this method is the aggregate of the final expenditure in an economy. That what is the expenditure being done, then why it is being done, why it is being considered for the national income? Because, sir, when will the expenditure be done? If there will be income, right? The expenditure will be done only if there is an income, right? So that helps in telling us that what is the income level. If people are ready to spend on the various goods and services, right, that means the people are having a good standard of living. People want to maintain that standard of living, and the people have so much of income that they are ready to spend on the consumption of goods and services, isn't it? Now you must have seen during the COVID what happened. During the COVID, the expenditure was down. Why? Because the people were not having that much of income, right? People were not having that much of income, and if the income was not there, the aggregate expenditure in an economy was down. And that is why we say that the overall standard of living or the overall growth of the economy was down, isn't it? That is a very basic concept. So the expenditure method says it is national income is the method, national income by this method is the aggregate final expenditure in an economy. Why this final word has been used? The final word has been used because this is what is the final consumption. There are two types of consumption. One, we have already studied about the intermediate consumption, right? This is the final consumption, right? Final consumption to the consumer, that we are not going to use it for the further manufacturing of goods. It is for the final consumption, right? There is no further processing to be done on the goods or services that we are buying here. Otherwise, it will become your what? Intermediate consumption, right? Then it will move on to the value added method. Now, what are the various components of the final expenditure? There are 4 different components of the expenditure, right? The first is the private final consumption expenditure. It refers to the expenditure incurred by the households like you, me, and the private non-profit institutions serving the households on the type of on all types of consumer goods. What is this private non-profit? It can be NGOs, right? It can be NGOs serving people. NGOs serving people. Sir, how it is being included in the private final consumption expenditure? Sir, the NGOs buy the material, right, and they provide it to the people, right? It can be old age homes, it can be for the children. There are various NGOs that are working, right? That is why it says either you or me go to the market, buy some goods. That is what? That is a private final consumption expenditure. We go to the market, buy bread and butter, come home and consume it. That is what? That is a final consumption expenditure. Or what will happen? The NGOs, they will buy the goods from the manufacturer or from the shop, and they will take it and give it to the people. That is again what? That is a final consumption expenditure, right? On the various type of consumer goods. Consumer goods means all those goods which are being consumed by us in the daily routine. Clear? It includes the value of primary products produced for own consumption, right? Like the farmers are consuming their own produce, right? Wheat, they are consuming the wheat, they grow the wheat and they consume the wheat. That is for own consumption. The payment for the domestic services which one household renders to the another. Payment for domestic services which one household renders to the another. Now, you must have seen in your homes, the sweeper comes, the maid comes, you are paying to that. That is a household, we are a household, right? So for the domestic services which one household renders to the another. Clear? Understood? Then the net foreign investment. If you are doing the expenditure in the form of the foreign investment, that is also to be included in the private final consumption expenditure. You make some investment in the foreign, say shares, bonds, or anything of that sort, right? It also includes the expenditure incurred by the normal residents, whether in the domestic territory or abroad. So if a normal resident is doing an expenditure, at what place he is doing doesn't matter, right? That is his consumption. Whatever he earned, he is now consuming that money, whether it is in the form of investment, whether it is in the form of expenditure, whether he is doing in the domestic territory or whether he is doing abroad. He is consuming that money. Now, what is the purpose here? Sir, once he will consume that money, try to understand, then he will be in need of more money, right? Once you have consumed your money, you are in need of more money. For that, you will manufacture more, you will work more, and there will be more manufacturing of goods and services. You will earn more, again you will spend that money, right? That is why whatever the expenditure is being done by a private person, by a household or an NGO serving the household. The next is the government final consumption expenditure. Now, what is this government final consumption expenditure? It refers to the total expenditure incurred by the government on the provision of services such as defense, education, healthcare, etc. For example, government buys what? Defense equipments. Government buys defense equipment, right, from manufacturers and give it to army right? Now what is it? The government has taken the equipment from the manufacturer and it is given to the army for what? For the final consumption, right? So here who is spending? The spending is being done by the government. That is why it is known as the government final consumption expenditure. Clear? It excludes the government expenditure on the transfer payments. Obviously, sir, transfer payments not included in national income. Not included in national income. It is anyhow not included in national income because the national income says that there should be some services or the goods being provided for the payment. And here there is no goods, no services. Clear? Okay. After that, we have the gross domestic capital formation. Now, within the domestic territory, if we are forming capital means you are investing in the fixed assets or you are manufacturing the fixed assets, right? It includes the final expenditure on the fixed assets like machinery and equipment, right? Final expenditure on the fixed assets, own account production of fixed assets. You are manufacturing the fixed asset. Why? because you want to use that fixed asset for the manufacturing of other goods and services, right? Let's say you want to manufacture a pen, right? For the manufacturing of pen, you want a particular fixed asset, a particular machinery. Now you say, I have the capacity, I will myself assemble that machinery, make that machinery, and then use it for the manufacturing of the pen. Now, the machinery that you have made, that should be forming the part of national income through this gross domestic capital formation, because using the money that you will be earning, you are making that fixed asset or you are buying that fixed asset, right? Expenditure on construction, changes in inventories. Changes in inventories means here basically what he's telling is, inventory here means that you are stocking up the material, or there is a lot of material, adding, subtracting, changes in inventories, right? Which is still to be processed. Basically, more or less, we'll be talking about here the WIP or the fixed asset inventory, right? Because it is not yet finished, because once it is converted into a finished product, then it will move on to the value added concept, right? If we talk about the basic inventory, and when it is a raw material, then it is for intermediate consumption, again a value added concept. So here we take the change in inventory according to the WIP concept, that how many units are still in the production, or whatever the fixed asset inventory, the change in the fixed asset inventory. And the acquisition of valuables. What can be the valuable here? Sir, jewelry. It is a valuable. What is that? It is your fixed asset, sir. Right? So you have earned the money, you go to the market and buy a necklace, right? For your family member, right? It can be for your mother, it can be for, your sister, wife, anyone, right? Valuables you are buying. That is again what? That is again a fixed asset. So he says gross domestic. Gross means here you have to consider the depreciation. Be very careful what he is saying. Here first part was the private final consumption expenditure. Second was the government final consumption expenditure. Then the third is gross domestic capital formation. Two words are important here. One is the gross here. The second is the domestic here. Not the national concept. It should be within the domestic territory of the country, and it is a gross concept. Then is the net exports. Net exports is X minus M. What is X? X is your exports and M is your imports, right? Now, exports refer to the expenditure by the foreigner on the purchase of domestic goods. You are manufacturing the goods, you sell the goods outside, and the foreigners are ready to pay for that. The imports are the expenditure by the residents on the purchase of foreign goods. Now, here the residents, they are buying the goods from outside. We know export, import. So, net export is the difference between the export and imports of a country during the counting year. It can be positive or negative. Accordingly, it has to be included in the national income. Right? It has to be included. If it is positive, it will be included. If it is negative, it will be subtracted. Clear? We'll cover that in the practical problems. So basically, if we are talking about the expenditure method, there are four components of this expenditure method. One is the private final consumption expenditure, right? The second one is the government final consumption expenditure. The third one is gross domestic capital formation. The fourth one is the net exports, that is exports minus the imports. Okay. Now he says how to compute it. He says the private final consumption expenditure plus the government final consumption expenditure plus the gross domestic capital formation plus the net exports. Now the question here is, what is the question here? Listen to it. Sir, why we have taken here GDP at MP? Firstly, it is the market price, because when you are going to the market to do the expenditure, you will buy the goods at factor cost or market price. Let's say you are a private individual, you are a household, you will go to the market, you buy a soap worth rupees 30. Now 30 is what? It is a market price or the factor cost? Sir, it is a market price, right? That is why it is a market price concept. Secondly, why it is GDP? Sir, when we are including the gross domestic capital formation, that means you are including the depreciation here. Now, if you are including the depreciation, you cannot have NDP at MP. Secondly, he says anything which is done within the domestic territory of a country, gross domestic capital formation, right? So that is why it is a GDP at MP concept. Clear? Now from GDP at MP, you have to go to the NNP at FC or to calculate the national income. So what he has taken, he says from domestic to national, NFIA, you will add NFIA, make a small change here, sir. Make a small change here that here NDP at FC, it should be GNP at F, it should be what? It should be GNP at FC, right? It should be GNP at FC. That is GNP at MP minus net indirect taxes. Then what is national income? That is GNP at FC minus depreciation. That is from gross to net. Clear? So here is a mistake in the book. You can correct it out. And all those who want the books, they can buy it from our website. The link is given on your screen here. And also in the description of this video, www.ksjteaching.org. And guys, the financial management regular course in English is also available on our Android and the iOS mobile app. All the links are given in the description of this video, right? Go check it out. And that is a very good detailed course where you will get ultimate concept clarity, as you all know, right? So this is how the national income is being calculated by the expenditure method. After that, there is what is the in the next lecture, what we will be doing is, in the next lecture, sir, we have to do the practical part of it. Right? Before we close this chapter, we have to do the practical part of it. Very important, right? Because the 5 marks practical, you are definitely going to get it from here. The last topic is limitations of the national income computation. That is there any limitation? Yes, he says the household production is ignored. Your mother is making the food in the kitchen. That is not included in the national income. Lack of technological upgradations in the managerial innovations. That is not considered in the national income. The transactions are ignored where no records are maintained. For example, the underground economy, that is drugs, gambling, right? At the very beginning, we talked about the illegal transactions to be ignored in the calculation of GDP, right? Illegal transactions. But there is a huge market for these illegal transactions that is going on there. Whatsoever the efforts the government is making or they will make in the future also, but this market, yes, that exists. And that is anyhow, the people are buying those, the people are spending the money on buying the drugs, or people are spending money in the gambling. That all should be considered while calculating the national income. After that, he says the disutility of the loss of leisure time as only working productive hours are considered. He says when you are talking about the national income, what you are talking about? You are talking about what you are manufacturing, what you are income, what you are spending. Now, right, in this whole process, you are losing out on your leisure time. Why? Because the people are busy in earning more and more money. The people are busy in manufacturing more and more goods. Now, where is the leisure time? Sir, we as chartered accountants, we as CA students, we don't get the leisure time, sir. Right? So, this utility of that loss of leisure time, sir, then we will definitely make the amendments, right? Because we are the major sufferers as a CA student, sir. We don't get leisure time at all because we have studies, we have classes from morning till night, right? You are taking the live class also at night, sir. Sir, we are really tired by night. No leisure, nothing, sir. No parties, no marriage functions, no family functions, nothing, sir. But it's okay. It's all worth it in the end when you will see that 2 words CA before your name, right? Then everything that you are losing right now, or that you feel that you are losing right now, everything will be worth it, right? Mark my words, you will remember that. Okay, so after that he says the economic bats like pollution, crime, traffic are ignored. Obviously, these things does affect the quality of the life, the standards of living, but these things are ignored. The volunteer work and services rendered without any payment which contribute to the social well-being are ignored. Like I am providing the services, volunteer services without any payment, right? I'm providing the full courses free of cost on YouTube. I'm not getting any payment from you, right? If you are buying my books, that is one segment. Here on, if I talk about the lectures on the YouTube, then it is absolutely free of cost, right? I am rendering the services without payment and it is contributing to the social well-being, right? These are being ignored, sir. National income doesn't consider my services, sir. Very bad. This is very bad. I'm very sad today. So inadequacy of the data and the lack of reliability of the available data, obviously it is very difficult in a nation like India with such a huge population. How can you say the data will be accurate? So these things will, the practical difficulties will always exist, right? The absence of recording of income due to the illiteracy and ignorance. Many people do not know what is the income that they are getting. They don't have the bank accounts, right? So the proper recording is not possible in those cases. Now with this, our chapter is complete. No, sir. We have to cover the practical part. After that, this chapter will be complete. The conceptually, if we talk about, this chapter is complete, right? All those, most of you must be having the books because it was necessary with this particular course, right? So from the books, what you have to do is you have to go through all these topics once again, and in the next lecture, we will see you with the practical part, which is one of the most important parts. 5 marks question, at least 5 marks question of the practical from the national income you are definitely going to get in the examination, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.